Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial world, and today we have an annual report from Gelteq Ltd. And let me tell you, this one has some interesting twists and turns that might just surprise you. Prepare for a ride because we're diving deep into what makes this company tick. And trust me, it is not all sunshine and rainbows. Before we dive in, if you love getting these unfiltered looks at company filings, make sure you hit that subscribe button and the notification bell so you never miss an episode. And hey, join our Discord community linked in the description below to keep the conversation going. Alright, ladies and gentlemen, let's get straight to the money because that is what we're all here for. Gelteq Ltd snagged some revenue in the year, ended the 30th of June 2025 raking in about 165,645 Australian dollars. Now this might not seem like a lot compared to established giants, but here is the deal. Last year they made zero, so this is a big leap from nothing. This revenue came from orders clients placed in the previous year that were stuck because some customers were having cash flow problems. Basically, they got their orders delivered and paid for in 2025 after sorting out their money issues. It is a good sign that they're collecting what is owed, but it also points to potential customer instability, which we'll need to watch. But here is where things get a bit heavy. In the year ended the 30th of June 2025, Gelteq posted a loss of a whopping 6.6 million Australian dollars. That is a huge number, especially when you compare it to the previous year's loss of about 3.5 million Australian dollars. They lost nearly double the amount in just 1 year. This means their expenses are seriously outweighing their income, and that is a major red flag for any business, especially one that is still trying to get off the ground. Now let's talk about debt. As of the 30th of June 2025, Gelteq had about 4.2 million Australian dollars in current borrowings and another 13,550 Australian dollars in non-current borrowings. This debt has grown significantly since the previous year when it was around 2 million Australian dollars. This increase in debt is likely to fund their operations as they haven't started generating substantial revenue yet, but it also means they owe a lot of money, and that always adds another layer of risk. Let's look at what Gelteq actually owns. As of the 30th of June 2025, their intangible assets, which are things like patents and intellectual property, are valued at an absolutely massive 19.8 million Australian dollars. This is a huge chunk of their total assets. In fact, intangible assets make up about 92% of all their assets. This tells us that Gelteq is betting big on its technology and its patents. They believe their intellectual property is the key to their future success. But here is the thing with intangible assets: if the business doesn't perform as expected, and these patents don't lead to successful products, the company could face a massive write-down, which would severely hurt their financial standing. Now let's talk about where the money to fund all this came from. Their issued capital, which is essentially the money raised from selling shares, jumped from about 26.6 million Australian dollars in 2024 to 33.9 million Australian dollars in 2025. This huge increase is because they had their initial public offering, or IPO, in October 2024, where they raised about 5.2 million US dollars. This influx of cash is crucial for a company that is burning through so much money. It is the lifeblood that keeps them going, but it also dilutes ownership for existing shareholders, which is a trade-off they had to make. Now, when a company goes public, it needs auditors, and Gelteq paid its auditors M1K CPAs PLC about 76,500 US dollars for their services in 2025. This is a standard cost of being a public company. Having independent auditors is essential for transparency and investor confidence. Let's look at the cash. In the year ended the 30th of June 2025, Gelteq used about 5.5 million Australian dollars in cash just to run its day-to-day operations. That is a massive increase from the previous year when they used about 1.1 million Australian dollars. They're spending more and more just to keep the lights on, which isn't ideal when revenue is still so low. Let's talk about the people steering this ship. Simon Zuoch is a co-founder and director. He has been in leadership roles for a while, including as managing partner of a company that invests in startups. He has got a business and finance background and clearly knows how to spot potential. Then there is Nathan Giovoni, another co-founder and the chief executive officer. He's got a background in health and physiology with over 15 years of experience. He's been involved in research and education at Monash University. His expertise is clearly vital for a science-based company like Gelteq. You know what is always interesting in these filings? The loans as of the 30th of June 2025, Gelteq had about 156,000 Australian dollars outstanding in loans from associated entities. These are essentially loans from companies linked to its directors, further showing how intertwined the company's finances can be with its leadership. And then there are the convertible notes. These are like loans that can turn into shares. As of the 30th of June 2025, Gelteq had about 2 million Australian dollars in convertible notes payable. This number has shot up from virtually nothing in the prior year. These notes are essentially a way to raise money now with the promise of converting debt into equity later. It is a common strategy for early stage companies, and it shows they're actively seeking funding through various avenues. Looking at the cash flow statement for financing activities, Gelteq raised about 1.3 million Australian dollars from issuing convertible notes in 2025. This is a significant amount and shows investors are willing to bet on the company's future through these convertible instruments. Now let's return to the bottom line. For the year ended the 30th of June 2025, Gelteq reported a net loss attributable to owners of 6.6 million Australian dollars. This is a substantial loss, and when we look at the shares, the weighted average number of ordinary shares increased from about 8.1 million in 2024 to 9.2 million in 2025. This increase is largely due to the IPO and other share issuances impacting dilution, but also signaling growth in investor base. Now let's wrap this up with my take on Gelteq. Gelteq is a company with a bold vision and a lot of promise in the gel-based delivery system market. Their strengths lie in their innovative technology and their strong patent portfolio. They have identified potential growth areas like dysphagia management and pet nutrition, which are smart moves. However, their biggest challenge is their financial performance. The consistent losses and the substantial debt are serious concerns. They are heavily reliant on future funding and the successful commercialization of their products to become profitable. The going concern warning from their auditors is a stark reminder of the financial tightrope they are walking. The path forward requires rigorous execution of their sales strategy, securing more partnerships, proving the efficacy and safety of their pharmaceutical products, and managing their cash burn effectively. It is a high-risk, high-reward scenario right now. Will their innovative gel technology become a market leader, or will the financial hurdles prove too great? Only time and strong execution will tell. What is your take on Gelteq's strategy and their financial situation? Let me know in the comments below. If you found this deep dive helpful, please give this video a thumbs up and subscribe for more. And as always, check out our Discord server linked in the description to dive deeper into these reports and connect with other finance enthusiasts. Thanks for watching, and we'll see you in the next decoding session.